Hello to anybody watching. It is Tuesday, June 16th, 2026. Today was an interesting day. S&P 500 ended the day down about 0.6%. Overnight, right now, it's up about 0.15%, so, it's not drawing down any further, so that's good to see. After the last couple days, it's not crazy to see it, kind of experience some profit taking and some risk off, since we did experience quite a nice jump the last couple days. Last few days, I should say. It went from about 724 all the way up to 756. That's about a 4% increase in just a few days. So for it to, draw down about 0.6%, nothing too scary, nothing too crazy. The Nasdaq went down 1.9%. This is a little bit more of a serious move, but still nothing too crazy. It looks like markets are just kind of heading down towards that gap that was created yesterday on Monday. So, they're about, for the S&P 500, it's the better part of 1% for it to go and fill that gap. For the Nasdaq to take it from, 730 down to that gap at 724, that's a little bit less than 1%. So, if we see that tomorrow, it's not to fear. It could just be the gap closing, whatever it may be. But with tomorrow, there are much bigger things on our plate. We've got the Fed rate decision and FOMC. And tomorrow's FOMC is the first one with a new Fed chair, Kevin Warsh. It's going to be pretty interesting. We had Jerome Powell for a handful of years. I'm not sure how many, but we've got a new guy. So it's going to be really, really interesting to see what his kind of feelings are on the economy and rate decisions in the future and just about everything. I'm sure he's going to be hit with a lot of questions that give us some insight to how he's feeling and what we should be feeling moving forward from here. So, like I said, index futures are up right now, kind of bouncing off of that red day. Yeah, S&P 500 up 0.15, Nasdaq up 0.25, the Dow, the boring Dow Jones up 0.12. Who cares about the Dow? We're all about the S&P and Nasdaq. I don't know about you. But I want to look at the bullish and bearish case for the FOMC tomorrow, what to look out for, what to expect, from both a bullish and bearish standpoint. And then I've got a few stocks to show you, depending on how tomorrow plays out. So, overall, I would expect more of a bullish day tomorrow, not gonna lie. I'm just gonna say it straight out. The market is pricing in no change in rates. 98 to 99%, you might as well just call that a 100% chance. The rates are not going to change tomorrow. The main thing that we're going to be looking for is the dot plot to see how other Fed members are feeling about the future, and Kevin Warsh's first press conference. That's going to be huge, and it should be a lot of fun to watch. For a bullish scenario, to keep it simple, if the dot plot shows more cuts than expected, more Fed members are leaning towards cutting in the future, that's going to be very bullish. Because if they even think about cutting rates, that's going to take a lot of pressure off of a lot of people who are worried about rates being hiked later this year. So, especially with inflation coming down in the future, that would be a reason that they get more optimistic about rate cuts. Any type of growth slowing and the economy may need a boost. That's going to be another reason for some rate cuts in the future. And if we see any sign of rate cuts being on the table for this year, it's going to be really, really bullish. When Warsh talks during the press conference, because how it works is the Fed's going to release a statement at 2 p.m. tomorrow. And then at 2:30, they're going to start that press conference and ask Kevin Warsh a bunch of questions. So at 2:30, when he starts getting questions, you want to look out for him saying things like inflation moving in the right direction, we're encouraged by recent data, anything that kind of hints at them being open to cutting rates in the future as long as the path of inflation and the economy continues. So anything that can give the market hope of rate cuts being on the table, it's going to be good. Stocks are going to go up, almost certainly. So another thing that kind of plays into the bullish bias here is the deal that Trump made with Iran that's supposed to be signed off on Friday. This deal took oil down a lot. It dropped a lot. So a lot of inflation pressure is kind of coming from the rise in oil prices recently. So now if oil prices are dropping and people aren't going to be as worried about future inflation since future oil prices won't continue to rise if this war is over, their outlook on inflation might be a little softer and a little more bullish. So that would be huge. Trump picked this guy, so I wouldn't be too surprised if he kind of plays into, the situation that Trump is preferring. I wouldn't be too surprised here. So, one last thing for the bulls to look for tomorrow. No discussion of future hikes. You do not want to hear him float the idea of future hikes. If he does that, for whatever reason, that's not good. People are already worried about that, and if it's confirmed, there's probably going to be a lot of risk-off trading happening, and, the stocks are going to fall. All those growth stocks, all those hot names that are going crazy, they're going to feel the pressure if he talks about future hikes and the economy tightening up. That is not what you want to hear. Now, I wouldn't be too worried about hearing it because of, what I just went over, but, hey, we don't know this guy. This guy's new. He could have any type of sentiment. So, it's you can't write this off that, this won't happen. So, for the bearish scenario, dot plot moves higher, pretty much the opposite of what we started with. If Fed members are a little more cautious about the future of the economy and the future rate cuts or rate hikes, it's going to look tough, and it could scare some people off if, the broader consensus is that we may need to hike in the future, or we aren't in a good spot to cut in the future. Anything that prevents rate cuts, not going to be perceived as strong, for sure. Inflation language gets tougher. If they show that they are not confident with how inflation is acting and heading, it's going to be tough. We want to get a confirmation that they are confident with how inflation is moving. If they're more cautious about it, especially when Kevin Warsh is being asked questions, if he's saying progress has stalled, there are upside risks to inflation still, if he gives credit to the deal being made with the Iran war but still highlights that there's risks to inflation, that's a buzzkill right there for sure. So we do not want to see any language that indicates that they're still very worried about the future of inflation. This is a legitimate case where they still are worried about the future of inflation, but I would lean more towards optimism about this because of the deal being signed and, oil being really volatile lately, and it just came down a lot, and it should continue to go down. So, all things considered, I wouldn't be as worried about this as I would be optimistic about the other side of it. So, but hey, anything can happen. Again, we do not know this guy. We do not know how he feels. We are going to find out tomorrow. But you can't predict the future, so you gotta keep that in mind. And then a real bearish thing would be Warsh refusing to discuss cuts. If he just comes out and shuts down the idea of rate cuts later this year, it's gonna be tough. The market wants to hear optimism around future rate cuts because rates are elevated right now because inflation is elevated. So you can't really blame him if he's not sitting there saying, oh yeah, let's cut. But if he refuses and shuts down any type of talk about rate cuts, it's going to be scary. I know I would be scared. Just a little bit, because the economy's kind of running hot right now. And if there's that mention of it tightening up and, them, keeping the pressure on and not just freeing up the rates to let the economy run hot, it's going to be tough. And that's just not optimistic. It's not what you want to hear, especially when the market is at where it's at. It's up towards all-time highs. It's about 1% and some change off of all-time highs, so it's got room to the downside. As we saw in just the last little week alone, it's vulnerable to sliding very quickly. In one day, I believe it was a 4% drawdown on the NASDAQ. You could see that tomorrow if the language is really bad. It's not off the table. So, higher oil prices is another thing. Again, with the war ending, I'm not too worried about this one. But, again, you don't know. You don't know what they know. They could say, yeah, oil prices may take a long time to stabilize even though the war is over because, the Strait of Hormuz is backed up and, it's not being transported as we would like it to be. Anything negative. So any mention of oil that puts pressure on the future outlook of oil prices, inflation, and the economy, and that would even tie into rate cuts or rate hikes. It could be a domino effect that causes a lot of fear. So just keep an ear out for that one. I'm not too worried about that one again, but you gotta keep it in your mind. You gotta be ready for anything. So that's the main stuff to look for. Again, I'm more so bullish than bearish. It's honestly easier to be bullish than bearish because, if you look at the stock market, it has its times where it goes down, but most of the times it goes up. So you're playing the better side when you're just more optimistic than pessimistic for sure. So with that being said, just keep an open mind to everything you hear tomorrow. It's probably easiest to not do anything crazy tomorrow because sometimes it takes time for news and new sentiment to be digested. So it might look good real quick, but as the market thinks about it, it might start to not look as good. So don't see an upward or downward move on the initial 2 p.m. Like press release or the 2:30 to 3:30 p.m. Questionnaire. Like, don't see that initial move and be like, oh yeah, we're good to go, or oh yeah, we're doomed. Because I don't know if you've seen previous FOMC days, but these days can be volatile. With how Kevin Warsh is a new guy, I could see it being extra volatile. Whereas Jerome Powell's last meeting wasn't a big deal. With this new guy coming in and a lot of questions surrounding him, it could be a big deal. So just be ready. Be ready. We could have some volatility tomorrow, but it should just be fun overall to watch because the market's not in a bad spot. And over time, it'll probably go up. So not too much to worry about unless you're, really, really leveraged for just tomorrow's move alone, which, don't do that. Anyways, I've got a few stocks to go over. The first stock, for obvious reasons, is SpaceX. It's been out for 3 days, and every day it's traded, it's been green. It's been really hot right now, and it's, I feel like it's a pretty good stock if you want to trade. It's volatile. It's not going to move a crazy amount. It's not like some penny stock that's going to, pump or dump 50% in a day. At least I think. Who knows? If anything, I think it would go up 50% in a day because people are so crazy about this thing. But for the bull case, strength could continue. If tomorrow is bullish with the whole FOMC meeting and all that good stuff, it could continue higher. Look for it to break that 225 level. Look for it to break that 229 level that it hit overnight last night. And if it does that, it might just go off to the races. Options are live now, which means that it could gamma squeeze. There's a lot of volume on these option contracts. So as market makers sell these contracts, if the stock reaches those strike prices, those market makers are going to have to buy shares to hedge as the stock goes up, which just increases the pressure on it. So, that doesn't happen all the time. There's so many shares of the stock being traded, it might kind of fly under the radar, and a gamma squeeze may not happen, but it's a thing that exists in the market, so just know that that's a thing. If tomorrow's bullish, I could see this continuing higher, just because, it's not being rational, but it doesn't have to be right now. It's a SpaceX IPO with Elon Musk's name tied to it. Are you really surprised that this is how it's gonna go? Because I'm not. If it's bearish tomorrow, though, I would look out for this thing to take further profit taking for sure. Today it hit a low of about $194. We'll say $195. That's a $30 drop from its high of the day. This thing is volatile. It moves over 10% one way or another. It goes up 10%, it comes down 10%. And this is just on a calmer bearish day. If tomorrow is a very bearish day, you can expect this thing to slide down through all levels it's made so far and retest lower levels. You could see it come all the way down to 176. Stuff like that. It hasn't really tested itself yet. It's kind of only gone straight up, and it's consolidated here today. So the next move it makes is going to be pretty interesting. SpaceX is it's a volatile stock. It's a little pricey at $205. So if you want a little more volatility and, be able to get some more shares under your belt, I've got 2 stocks tied to SpaceX for you. I've got Space M, SPCM. This is just a 2 times long SpaceX ETF. So if SpaceX goes up 5%, you can expect this to go up 10%. It's pretty much going to be double the returns and double the losses, depending on how actual SpaceX moves. On the contrary, we got SPCQ. This is a 2-time short ETF for SpaceX. So if you think SpaceX is going to go up and you want to play to the upside, you would buy SPCM and you would look for a stronger upward move than you would get on a normal SpaceX share. And if you think SpaceX is going to go down, you would snag SPCQ. And this stock will actually go up if SpaceX goes down. So, the options came out for SpaceX and they're really pricey. So if you want something that's kind of middle ground where you're not playing just shares and you're not playing super pricey options, you can play these leverage ETFs to catch more volatile moves if you're correct in the way that you're trading. So those are interesting. I'd definitely watch SpaceX tomorrow. Another one, we got NVIDIA. A little bit of a boring recommendation, but come on, it's NVIDIA. If the market sees a strong day tomorrow, don't be surprised if NVIDIA grinds up 3, 4, 5%. This thing's kind of been selling off, and it hasn't really bounced once the market found relief. Sure, it came up from, 200 to 212. That's a nice, 6% run? But it's still from its high recently of 236 down to where it's at 207. That's a pretty good drop. It could go up 10% and still not be at all-time highs. So, throughout the rest of the week and the week after that, if the market stays bullish, I wouldn't be surprised to see NVIDIA grind back up and test levels around, 225, 230, looking to make new all-time highs. Because if the AI sector is hot, if risk on is on, NVIDIA is going to be primed to catch some of that money. Because people love NVIDIA. It's the most established and maybe the most well-positioned company in the world right now. So if people are bullish and they want a good place to put their money, and they see NVIDIA off of the highs by over 10% right now, they might just pick it up. So that's the next one I got for you, NVIDIA. The last stock I got for you to look at is Intel. Now this one's a bit interesting because it bounced a lot better than NVIDIA did. It came up and it touched, those are new all-time highs. It touched new all-time highs at 133 just yesterday, but it came down to 117 today. So tomorrow, if the market is bullish, I wouldn't be surprised to see this thing retest these high levels over the next coming days or next week. This stock is hot. It is very hot. It is backed by Trump and the government, and don't you dare forget that they were in talks with Apple to produce their chips for their phones and devices. So do not think that this is too overvalued right now. If they score an Apple deal, a multi-year Apple deal to make their chips, do not be surprised if this thing gaps up over 10% on that news, because that is a huge partnership for Intel. That is how they're going to take themselves from catching up to being in the game. And they already are kind of in the game now because they ran up from $20-something to, over 100. But, when it rains, it pours. This thing is hot, and it's going to continue to be hot if it gives the market a reason to be hot. People are going to scoop this up if they see both a bullish market and good headlines. And, there's no extra word on how that Apple deal is going. That's kind of how it works. I feel like a lot of times you see news like this come out where, they're in talks to do something, like a company's in talks to do something, and then, it doesn't happen the next day. It happens, months later, so people forget about it. And then it becomes less priced in, so once it really comes through and hits the wire, the stock pumps once again on the news. So I can see that being the position that Intel gets itself in over the next month or two. If tomorrow is a little bearish at some point, I can see this thing going down towards 110. It's been very volatile lately, so you don't have to be too mad about not getting these prices down at 100. You don't have to buy 117. If it swings down, which most days it does, you can see it's very hard to find a day where it just goes straight up all day. You had a few back here when it was really climbing, but as of late, it's been swinging. So you can be comfortable and just wait for it to dip and buy that dip if you want to go long. Those are the 3 stocks I had for you. I appreciate you watching. I wish you luck tomorrow. Tomorrow should be fun. We'll see where it goes. Trade safe and good luck. I'll see you.